Greetings, Dwayne, CFRN. We're going to do a quick recap of the one trade a day on the S&P 500, the one trade a day for Friday, the 13th day of November 2015, said to consider being short below 2020. Okay, let's put that on the chart. Okay, the first move down, we got to 2017.50. So from 2020 to 2017.50, that's going to be 2.5 points. 2.5. Now, important prices, important areas are almost always tested. And so, on the next move down, we get to 2016.75. So from 2020 to 2017, that's going to be 3.25 points on that move. 3.25. Okay. On the next move, important prices, important areas, you know the drill. Okay. Swing low is 2017.25. And so that's going to be 2.75. Gold's 2 points a day. 2.75. And then last but not least, this little beauty here gets above the trigger, drops, swing low, 2011.5. So from 2020 down to 2012, that would be 8. So it's going to be 8.5. So that's the deal. On the S&P 500 Emini Futures, the one trade a day said to consider being short below 2020. No trigger on the long side. First drop was 2.5 points. Second drop, 3.25. Third drop, 2.75. The fourth drop, 8.5. Could you take 2 points out of that? Yes. Our goal is 2 points a day, which is $100 per contract per day. Now that's if you're trading the S&P. If you're trading Crude or the Russell, which we'll look at in just a moment, those don't pay $12.50 a tick. They pay $10 a tick. In those markets, you need 10 ticks. In the S&P, you just need 8. S&P, Euro, and soybeans, those pay $12.50 a tick. You need 8 ticks. Done for the day. Okay? All right. We will move on to the Dow. Let me enter my username, my password, and today's trade, short below 17,220. So let's go to the YM. All right, here's the Dow. Consider being short below 17,220. Let's draw a line at 17,220. That's going to be right there. 17, nope, it's going to be right there. Now, this is what they call a predicament. You ever been in one of those? Predicament? Sure you have. Come on. 17,220. But we got to drop it down 1 tick. As always, 72.19. Because it says consider being short below 17,220. So you're going to sell 72.19 on a stop. You got triggered into the tick. To the tick. Do you understand if this had been just one tick further, if this had stopped at 20, leg, retrace, leg, retrace, leg, retrace, leg, you know, if it had just stopped, we wouldn't have got stopped out. But we got stopped out for 8 ticks. True story. Okay. Now, important prices, important areas are almost always tested. Let's see if we triggered the long side here. 330. We did. Alright, but you got to go that one more tick still. So it's got to be 31. You're going to buy 31 on a stop. Better write those numbers down. $17, 330, and 17, 220. Try that again. 17, 220. Okay. The swing high is 351. So from 330 to 351, it's 21, but we bumped it a tick, yeah? So it's exactly 20 points. The Dow pays $5 per point, so 20 points gives you your $100 per contract per day daily goal. It's done. That's it. Okay. Now, so we get stopped out for 8 ticks or 8 points. The Dow really doesn't do ticks, they just do points. So we get stopped out for 8 points, and then we make a run for 20. So do the math. Then we come back down, and on the first move down, we get down to 194. So 194, that's going to be 26 minus 1. That'll be 25 points. Are you going to get out with 25? No. What's going to happen is you're going to be trailing your stop. You're probably going to get taken out. Well, once you have 20, I mean, you really should bring you either get out with a hard target of 20, or at 20, you're, at 17, 18 locked in. By the time you hit 25, you absolutely, positively, beyond a shadow of a doubt, want to have 20 locked in. Okay? So the next move down goes to 188. So 20, 32, so that's 31. And then the next one looks like it goes 30. So I'm just going to do this. $31 and $30. Now the last one of the day runs all the way up to 172.17. Now 220 is the number. We drop it down 1 to 19, right? And the swing high is 17. So what does that mean? It means, based upon the book as we wrote it, just as we got stopped out because of one tick over here, The biggest move to the downside, which we dropped from 220 all the way down to 153. It's like a 60-point move, thereabouts. And we missed it because we needed to go 2 ticks higher to qualify to make the drop. You got to go at least 1 tick above the trigger line, and we didn't. So 8 tick hard stop. We never risk more than 8 ticks on a trade unless we're trading on a time-based chart like we showed today with the dollar, where we were asked to go to a 5-minute chart. We explained where the stop would be based upon the structure of the market. Okay, but when we're trading using the 8 tick hard stop, the way we do in the live trading room, we're never going to risk more than 8. So you have a -8, then you have an opportunity. You may, because it just went to 20 and didn't trade through. I mean, maybe you only picked up 15. But the next one traded through 20. It did 25. So you definitely got your 20. The next one did 31. There's 20. 30. There's another 20. Now, if you're an experienced trader, there's a chance this might not have got away from you. But just based, if you're new, just getting started, you're learning how to trade, okay? You want to obey the rules of the road, never risk more than 8 ticks, do everything the way you're supposed to do it, learn the right way. Because if you do things the wrong way, we can very easily get very good at doing things the wrong way. So my take is a beautiful day in the Dow. Congratulations to all the Dow traders. And we will now move on to the Russell. Okay, we're 12 minutes into this thing, and we are now on the Russell. So that's pretty good. Today it was long above 57 and short below 39 for the 1 trade a day. Long above 57. But we got to bump it 1 tick, remember? 57.10. And the swing high is 57.5. At 4 ticks, we move our stop to break even. And so, that was a break even trade. Now, we do need to highlight the 10:30 candle because that's when the alerts are posted. So, there we go. 10:30. All right. So a break even on the long side. And then in the short side, it was to be short below 11.39. Okay. And that happened here. Oh boy, did it even happen. 39.1. I'm sorry. Let's see. It's short below 39, so it's got to be 38.9. Is that right? It is. Well, the Russell's been at the head of the leaderboard for a long time. This is the beginning of the fall from grace, I guess. So short below 11.39. Problem is we ran out of day. Okay, so 11.39, 1 tick below 39 is 38.9. The low of this candle is 38.7. So here's the deal. With 30 minutes left in the trading day, got to ask yourself, and you know what, if we even take it down to 1 minute, so what we want is 1139, 1138.9. It was the final minute of the day that we touched the trigger. So no one's going to, so that trade didn't happen. It's interesting how it worked out. Final minute of the day, touched the trigger. Well, it says 38.7. My line is at 38.9. There, let me open it up. My line is at 38.9. The low of that candle is 38.7. My line's at 38.5. Yeah, it's not a straight line. So there we have it, story of the Russell. Next on the agenda, going to be gold. There we go. Make all the concierge stuff go away. And let's see. 30 minutes. Need a 10:30 candle. $10.30 candle. No long. 10.89. And no short at 10.77. So gold today was a no trigger trade. Okay. All right, after gold, crude oil. Okay. 41.10, 40.20. Make everything disappear. $41.10. No, let's first make this a 30-minute chart. First, let's find the 10:30 candle. That's it. Now we find 41.10, and we see that after 10:30, we did not trade above 41.10, and we did not trade below 40.20. So crude oil was another quiet market today with no trigger. Had some really big days in crude. And on the concierge side, we had a big day. But today, no trigger for gold. All right, next. Soybeans. Okay. Soybeans. 30-minute chart. 10:30 candle. At no trigger, that was from, we may be using it again here in a second, but that was from Concierge Alerts. Is that 1030? Yep. Long above? Nope. And short below? Nope. Wow. Really quiet today on this Friday the 13th. No trigger. Okay. Now that only leaves, well, that leaves two markets. Euro. Okay. 770 and 720. And it turns out 770 was the same on Concierge side as well. Sometimes that'll happen. That's not that often, but so since it was, I'll just leave that 770 up there. And let's see. It's 930. 1030 candle. Okay. So the beginning of this candle, that's when we post. So 770, we did trigger right at the end of the day. We ran up to 778. It's exactly 8 ticks. At $12.50 per tick, it takes 8 ticks to make $100 per contract per day. The short side was 10.720, and that was a rough day for the euro. What do we got? Yep. 718. Oh, the swing low. Come on, swing low, swing low. 18. So, yeah, that's just going to be a stop. Had an incredible week, and we had an incredible day all around, the exception these last few markets. But that's the truth about trading. If you haven't read The Truth About Trading and you plan to be a trader, stay a trader, you need to read it. It's that important. Okay. All right. Let's get everything out of here. Okay. 30 minutes, 10:30 candle. There we go. Okay. Bonds. Okay. And so this is what we've got for bonds. 153.23 and 152.10. 153.23 and 152. Again, no trigger. So we had a number of markets today with no trigger. Just as trades will get stopped out, there will be days we don't get a trigger. Now, one thing I want you to remember is that both the Concierge Trade Alerts and the one trade a day, they're valid until the new trades come out. Sunday night, the Concierge Trade Alerts will come out about 6:45 p.m. Eastern. I do have an event I have to attend, so they could be, you know what? I think Sunday night, you better look for more towards 9 to 10 Eastern because of this event I have to attend Sunday afternoon. Now, those of you who have access to the one trade a days, and since I've done the recap, I guess that's everybody. Don't tell anybody. Just a little bonus, little something to help get you introduced. Now, those 3 or 4 markets that we just saw that had no trigger today, I would watch those very closely Sunday night, because there's a high probability that we'll see a trigger in those markets before 10:30 a.m. Eastern on Monday. 10:30 a.m. Eastern on Monday, that's when we will publish again. But these trades that we just walked through, those numbers are valid until the new trades come out. So we did it. We did it in 25 minutes. Oh, the dollar trade I didn't show you. It's the one we had been waiting on. I was asked to go to a 5-minute chart today. You should go to the radio show and watch that. Now, we originally had put this up. Let's see if I can get it back to some semblance of how it was. It was on the 9th that we originally published this trade. Okay, that's just stuff. The trade was, here's the alert. We use an 8-tick hard stop as always. Okay. Now, on the 9th day of November, which was this day here, this was the 6th, so this was on Monday's radio show. We drew in this support area. We explained. If you go back to Monday's show, that's a great idea. Go back to Monday's show and scroll up to the point where I'm talking to David and we cover the dollar. Okay. On the 9th, watch that show. I said we need to pull back and touch this support area. I said we can drop down into it. We could even go below it. We could trade inside of it for a few days. But we're not going to do anything until we come back up out of it. Okay? We got to come back up out of it. And we're going to buy 98.81 on a stop. Okay? 98.81 on a stop. Our target 99.30. And look at the swing high. 99.30 to the tick. Okay? 99.30 to the tick. Now, if you do the math, that's a nice trade. There are 20 ticks to a point. There's 49, no, is it 80? There's 49 points involved. There's 20 ticks to a point, and each tick pays $5. So do the math. Real nice trade even for the 1 contract trader. If you're a 10 contract trader, look out. Now, we don't normally trade the dollar in the live trading room. We don't do it as part of the Concierge Trade Alerts. We don't do it as part of the 1 trade a day. However, I love the way this came together. Now, if we can do this on a daily chart, I'm real excited about what we can do on the smaller time frames. So if you have a thought, an idea, if you want to toss in a vote, perhaps, to maybe remove something that we've been trading for a while that's not so active, I don't know which one that would be. Maybe we could switch the dollar for the euro for a period of time. I'm willing to field your emails and suggestions. In the meantime, have a great weekend. Spend some quality time with your family. I'll see you in church on Sunday. And of course, Sunday night, I'm going to do my best to be here at the bell because I have to get out the Concierge Trade Alerts. I've got to get out the weekly trading zones. I just have a ton of work to do every Sunday night. And so I'll be around. If you need me for anything over the weekend, support at cfrn.net. Call me 949-42-EMINI. 99% chance you'll catch voicemail. If you leave a message, you'll get a call back. Okay, if you don't leave a message, you won't. But if you do, you will. Ball's in your court. Have a great weekend.